My very strong view is that the world has changed forever. I think it's actually uneconomic for banks to deal with very small lenders, and yet those small borrowers, and yet those small borrowers in the past only had the banks to go to, really, in the main. And that was particularly true in the UK. The alternative finance sector in the US is actually much bigger than it is here. If you actually look, even today, even after we've all been working very hard to provide finance to small and medium-sized enterprises in the UK, 92% of lending still comes from the banks, whereas in the US it's only 80% that comes from the banks, and the alternative finance sector is markedly larger. I think the same will happen here. Our alternative finance sector will grow and become a major part of lending to SMEs. Part of that is to do with the banks themselves, in that regulation has been tightened since the credit crunch, and it's now really very uneconomic to lend to an SME. If you lend to an SME as a bank on an unsecured basis, you have to have a 100% capital weighting in your books, whereas if you're lending on a secured basis or lending to a large company, you can lend 8 times as much. So it's clearly not economic for the banks to do it. And so I think that it will be very firmly the area that alternative finance providers focus on and flourish in the coming years. And in terms of what you can lend to and what you can secure on, we've heard from Angus about accounts receivable, which is quite a substantial part of the market, but there are lots of things you could lend for and against. So real estate is a relatively easy thing to do. There are platforms that have been around for quite a while now that are doing real estate and have got real traction, and I would expect that to become a bigger area of lending for small developers and so on going forward. But there are all sorts of other areas that are emerging, like second-hand car finance, lending against intellectual property, lending generally as a senior debt provider to SMEs, which is what Money & Co does, and lots of areas that I think that we can actually infiltrate over time. Some of the people in this room were at another similar conference in New York a few days ago, and one of the big topics for discussion there was, should a platform remain pure and just lend in one, what we call lending vertical, or should it look to diversify and lend across other lending verticals? And my very strong view is that actually lending across several lending verticals is a good idea from the business's point of view. And so that's something that we certainly at Money & Co are thinking about and looking at in some detail currently. Leasing is an area that I'm particularly interested in. Second-hand car finance is also an interesting area. In terms of geographic expansion, I think the big prize will probably be China. It's a very difficult place to do business. I have actually spent many, many years going to China and looking at it, and then haven't actually ever done anything because I'm terrified that we're going to lose huge amounts of money. But I do think it is an economy that you cannot ignore. And of course, at the moment, it's causing havoc for the world's markets because of its slowdown, and it's making everybody terribly nervous. But that doesn't mean to say that there aren't great opportunities there. And it reminds me slightly of things like mobile telephony, where when you go into a marketplace which is underdeveloped, often it leapfrogs. So with mobile telephony, a lot of countries that didn't have fixed wire telephony went straight to mobile, and indeed went straight to mobile-based banking. And I think the same will be true in China. They're not used to borrowing. It's very much been a cash economy. But as companies become more mature and they begin to see that actually debt can be a useful tool as well as equity in terms of growing their businesses, they may well not bother with the banks and actually go straight to platforms like ours. So I think China is a very interesting place to expand into. Most people think that they've got to expand into the US because the US is the biggest debt market in the world. But it's also an extremely complex market in that, in many ways, it's like 50 countries, not one. We've got all sorts of different rules and regulations surrounding lending, and these vary depending on which state you're in. And there are usury laws, which wouldn't affect us because we're not trying to apply ridiculous levels of interest. But for some companies, they do have to think about that. And it is a difficult place to do business in many ways. But I think if you are going to be a fintech, in inverted commas, company, then you do need to have some presence in the US. There is also an enormous wealth of talent there coming out of Wall Street and looking to be in much more interesting and exciting businesses. So from a recruitment point of view, it's a good place to be. And I think one of the things that I've realised when looking at different markets is that you can't necessarily replicate exactly what you're doing in, say, the UK, and then just take that off and do it in the US or China. I think you have to look at each market, and at different times in the cycle, there will be different areas that look appealing. So particularly in the US at the moment, I think import-export finance looks very interesting. Commercial mortgages for SMEs looks interesting. There is a problem in the US because of the banking rules in terms of companies that have two locations. So if you have a business which is partly based in Georgia and partly based in Vermont, a bank can't necessarily, who's banking you in Georgia, can't necessarily lend and secure that loan on your property in Vermont, because there are all sorts of rules about small banks having to only being able to do business in the next door state. So that creates an opportunity for alternative finance providers, and this is partly why that sector is bigger in the US than it is in the UK, because the banks don't have such an easy time of it.